Okay. We are live back again with another episode. This is episode 3 of tax season. We've been consistent the whole 3 weeks.
Yes.
It reminded me of that little meme a few years ago. That guy, he was like, I lost 3 pounds. He's like, not one, but two, not two, but 3 pounds. Yeah, consistent. Yeah. But yeah, shout out to us and shout out to y'all for joining us for another episode. Hey, Sonya, we got some of our team already tapping in.
Hey,
I
Sonia.
am Courtney. You can follow me on Instagram at Tax Coach Courtney. I am the owner of Core Tax and Accounting, a firm that I started after about 6 years with another company that remain nameless for now. And I started this company, and Brittany has been with me for 4 years now.
4 years.
So tell them who you are, Brittany.
I'm Brittany Johnson. So, as Courtney stated, this is my 4th year with Core Tax, y'all. And I feel like this is going to be like the best year. So
it's not just me.
It's going to be the best year.
I feel like, I don't know, for me, and I know it's probably just in my head, but for me, it's starting off slow, but it's so much foundation though. Like, we got so many people in the queue, and we got so many, like, I'm looking for, just send them off, and it's not happening like that. Or it's not happening like that right now. We are only 3 days in, but I keep saying that. Oh, the text just went out.
Oh, yeah.
I love that.
Yeah.
I love it. So, perfect segue, real quick. We have a text list, newsletter, text list, all the things, right? Tap in with us. There's a link in the description bar. It takes you to all of our resources, and one of them is to sign up for our text alerts. And throughout the season, we're going to be dropping little nuggets, like little facts, even some of the stuff that we're going over tonight. I know you saw the title. We're talking about these tax terms. So tap in with us. We got a lot of stuff going on, okay? Like, we got those alerts going out throughout the season. We got our own curated playlist to keep you kind of lit, throughout the season. And then we got this show every week, tax season. It's our weekly live show where we come and discuss things surrounding taxes and Black wealth, those conversations. And I really feel like we are just getting started. I was telling you, Brittany, I want to rev it up to more than once a week.
You did.
Because it just be so much I'll be wanting to say. So we may do more than once a week. I don't know. We'll see. We're going to pray about it. But yeah, make sure you tap in with us. The link in our bio is going to take you to all our resources. You can also book a free call with our team. It's a free little 15-minute call. If you got questions, before we get started with your taxes, you can do that. I think that's a good little resource. All right, but tonight we have a good show for you guys. We're breaking down some tax lingo. So this is like some common terms around tax season, just to help you kind of be informed and know kind of what's going on. We tend to kind of talk in tax terms because we're so used to it, but not knowing that somebody may not know exactly what we mean when we say AGI or taxable income or your tax liability or what the difference is. So we're going to talk about some of those things tonight, and we'll also go over some of the common forms that you want to be, uploading or preparing for your filing, and what and how they affect your return. We also want to have like some time for Q&A if time permits. One of the things last show I really liked was having people ask questions. I really like that. So yeah, I this week has been. I mean, it's only the third day of the week, so well, I count Sunday as the beginning of the week, so I'm gonna say it's the fourth day of the week. It's been. I feel like it's already. Actually, no, I can't say I feel like it's already Thursday. I feel like it's still Monday. Like I don't know. I feel like I'm in the matrix. Like I've gotten a lot done, but am I glitching?
Just a little bit.
Oh, I hate that. I'm gonna have to call AT&T. Try plugging into. Wait. It says if you're on Wi-Fi, try plugging into your router or moving closer to it. Is it a little better now?
Now it is.
We're struggling already, Lord.
It's all right. It's nothing but the enemy trying to get it stirred up.
I be wondering, is it probably better to do this not on Wi-Fi? I don't know. To be determined. We'll see. But anyway, how has your week been, Brittany?
My week has been busy, just, with work in general, but I'm just anticipating, the tax clients. I've been looking forward to our show today because, like Courtney said, tax season can bring a lot of anxiety. And, we talk in tax terms, but everybody doesn't know what these terms are. So it's been a busy week, but it's been an exciting week as well. How about yours?
I really don't know. Look, I've done so much this week, and it's only Wednesday. But I'm also looking at, I only got 2 more days to do a lot more stuff. So I'm like, because I do plan on not working on as much on Saturday, but we'll see how that goes. All right, let's get into it. So let's do our playlist pick. So as I mentioned earlier, we have these curated playlists, our firm, and we have 2 of them out right now. So Brittany actually curated one. I curated one, but the one we're picking from today is volume 2, which is the one that Brittany curated. And my playlist pick is Motivation by T.I. T.I. always gonna do it for me, like going back to trap music, and I know this is from Urban Legend, but yeah, that T.I. Motivation still hits. Like it still
Yes.
make you be like, you can look me in my eyes, see I'm ready for it. Yeah. It still get me there. What is your playlist pick?
My playlist pick for this week is Can't Tell Me Nothing by Kanye West. Like, when I hear that song, I immediately just vibe heavily. So I listen to it when I work out. I listen to it in the morning time. Like, it just gets me ready because it's like, can't tell me nothing. Like, you can't tell me nothing.
Period. Hey Kimberly. That's one of your clients, Brittany.
Yeah.
I like the first. I don't know. I think it was the first line of that song. He was like, "I had a dream I could buy my way to heaven. When I woke, I spent that on a necklace." I told God I'll be back in a second. Man, it's so hard not to act reckless. Oh, Kanye.
Yes.
New Kanye and whatever. That's a whole nother.
Right.
Love old Kanye.
Yeah.
All right, y'all. So let's get into these tax terms. Let's start with. Oh, let me introduce the segment like a proper host. So this segment is called Well I Heard. And it's our take on, just what's been talked about or hot topics. We'll say hot topics. Um, so let's talk about these tax terms. You'll hear us say these things, especially when we're on the phone explaining your tax return to you. I love both of those songs. Get me ready for a good day, right?
Yes.
Tanisha, one of our team members, she was the host last week. Everybody say, "Hey, Tanisha." Hey. Okay. And I'm actually going to our firm's page because we just made a post about these common tax terms, and so that's where I'm going.
Oh, yes.
To read from. So the first one is taxable income. Taxable income. And if you guys have any questions or need us to give an example or run that back, let us know. And if you're watching the replay, still, if you got questions, put them in the comments, or you just follow us on Instagram.
Mm-hmm.
You just follow us on Instagram at mcortax, and we have a lot of these little resource posts. Anyway, so taxable income. What is taxable income? I'm gonna read the definition first, and then maybe we can give you some examples. So, taxable income is the portion of your total income that is subject to taxation by the government. It serves as the basis for calculating the amount of income on which you owe federal and, in many cases, state income taxes. To determine your taxable income, you start with your total income and then subtract various deductions and exemptions allowed by tax laws. So then the little calculation is taxable income equals total income minus deductions and exemptions. What heck is this saying? So your taxable income comes from any W-2s you have, any income sources. It could be interest income, dividend income. It could be your wage, your W-2 job. It could be side hustle jobs from 1099s, 1099K. Whatever tax document reports income is going to come there first. Then we're going to take deductions. We'll talk about that too, but we got the standard deduction, and you got all your deductions that you qualify on your own.
Mm-hmm.
And I think we talked about this a little bit last week or the week before. The standard deduction is just based off of your status. It's just given to you, standard deduction, right? But then you have deductions that you qualify for. You meet the requirements for them, whatever. So we take those deductions off of that income, and any exemptions that you have, we take that off of that income, and that's what give you your taxable income. And it's really what it sounds like. It's the income that can be taxed.
Yeah.
It's before we take any credits. That is the income that can be taxed. So notice I said deductions and exemptions. Deductions and exemptions come from come off of your total income, right? It's a taxable income. Some of the other terms that we'll go through, which is tax liability, credits, and deductions, will start to make sense. But in your head, just think of the flow. We get it all year, all through beginning income, right? You working a job, you're doing all these things, and at the end of the year, all these places are sending you all these forms. We pile all those forms up,
Mm-hmm.
all the ones that give you income, and that's going to give what is called the adjusted gross income
Yeah.
first. Maybe I should start with that one. Adjusted gross income.
Right.
So let's roll into that one, and then we can go into credits and deductions.
Okay. So for the adjusted gross income, that is like your total income. So your wages, your business income, minus specific deductions. So some deductions may be like the student loan interest or educator expenses. And so the AGI, adjusted gross income, that's the starting point for determining your taxable income. So that's why that term is used so heavily, okay? And so basically total income minus deductions, but not the standard deduction.
Right. So the adjusted gross income is the starting point. So once we get all of your income, all of your forms keyed in, that's going to give us the adjusted gross income. Then when we adding all the deductions and credits, it's constantly taking it down, right? Because you got to remember, you're getting taxed off of the gross income. That is the point of all the deductions and credits, but we are getting that down, right? We want to get that down as far as possible so you can either not owe, break even, not owe, or get a refund.
Right.
You know,
Right.
that is basically the process. So we have adjusted gross income. These weren't really in order, but maybe they should be to kind of make it make sense. Adjusted gross income. Then we have your taxable income after that. Then we have your tax liability. So the tax liability is going to be once we've kind of calculated your deductions and we've kind of gotten what the taxable income is, then we're going to take your we're going to add the tax onto that tax liability. Taxable income. So we start with your adjusted gross income, take the standard deduction, we take any other deductions or exemptions that you may qualify for, and that leaves us with your taxable income. Well, that taxable income is taxed, whatever your tax rate is, whatever tax bracket you're in. We kind of talked about that last week. That our tax system is a progressive tax system, so you fall into the 22% tax rate. It doesn't mean that all your income is taxed at 22%. That's another topic for another day, but if you want that explanation, let us know in the comments.
Yes.
But that taxable income is what is being taxed, right? So then we have your tax liability. So that tax liability is, you can look at it as your bill, right? Your tax bill. Then we start to take credits. Then we start to kind of chip away at liability with credits. So credits are basically what's taking your bill down and getting it to either zero or a refund, which is why we talked about last week the child tax credit being a refundable refund. Refundable credit. You got credits that are refundable and credits that are non-refundable. Some are just taken away from the liability, but some are actually creating a refund, like giving you money back. So the earned income credit, we got a child tax credit. Some of the other ones would be like education credits. We have education credits in the sense of you went to an accredited university or institution, you paid for it, or grants, or however you pay for it, but the difference, those type of credits. We have, what's another like common credits that we see?
A premium tax credit.
Yeah, so if you purchased healthcare through the marketplace, and you meet the requirements for the premium tax credit, that can kind of bring it down. But that credit is something that you got throughout the year, but we just have to report it on the tax return. But credits definitely help. That's why you find people like trying to see like what I qualify for, and they're trying to make sure they can, have these credits on there so it can take your tax liability down.
Right.
So let's break down just real quick the difference between a deduction and a credit. And as clear as it is in my head, I know it's not that way for everybody. So I want to make sure we kind of say what the difference is. Uh-oh. Glitching. Can you still hear me, Brittany?
I can hear you.
Okay.
I can hear you. All right.
Um,
So the tax deduction, basically deductions, they lower your taxable income. All right, so which means that you pay taxes on a smaller amount of your earnings. So that's what a deduction is. Um, so there's some different ones, such as the student loan interest. Now I know last year a lot of us that owe student loans got our notification stating that we have to start back paying and start accruing interest. So some of us might be getting a student loan interest statement, your medical expenses, your charitable donations. Those are some tax deductions that mean, again, that means that you're going to pay taxes on a smaller amount of your earnings.
mm-hmm. And then the credit, like I said before, a tax credit directly reduces the amount of income tax you owe, providing a dollar for a dollar. So I think how I think about it, and maybe you have to see a tax return to get I don't think you have to see your tax return to get this, but I love deductions as above the line. So um off of the income, and then credits as below the line, which is off of the liability. So once we get your taxable income and we know we can't deduct it no more, we can't, chip away at the income, this is actually what you're going to be taxed on, then we can put credits on it to try to chip away at the bill. When I say tax liability, I think bill. Like,
Right.
this is what the bill is based on your tax rate and what we got the income to be. Now we can take away from the actual bill.
Mm-hmm.
And those credits are, like we said, dollar for dollar, most of them. And then some of them will create a refund. And real quick, when we say refundable credit, so let's just say you had $100,000 in adjusted gross income. We're going back to the top of, I'm gonna say the top of the return. Adjusted gross income, $100,000. Say you were married filing jointly, and that took away, I don't know what the deduction, almost $30,000. We'll round up $30,000. So you left with $70,000, right? Then you got some other deductions that brought you down. We'll make it even like $10,000, right? So that's your tax liability, $10,000. So then we taking off all these credits to get that $10,000 bill as close to zero as we can get it, right?
Right.
So the credits that we take first are the non-refundable credits, which is just taken directly off of that $10,000. So let's just say, for example, we taking off I can't think of one right now. Oh, let's say the education credit, $2,500. I'm gonna round it up because it's easier for me. $3,000. So now your bill is $7,000. We get another credit that takes it down to $5,000, and then another one too. It takes it down to like $3,000. When we get to the refundable part of the credits, we can take anything $3,000, and then whatever is left, it creates the refund.
Mm-hmm.
So we get to the earning credit. You got $3,000 in earned income credit. Guess what? Now you don't owe any money. Then you got another refundable credit, which is maybe you got the child tax credit, another $2,000. Now your refund is $2,000. Then if you got another refundable credit or whatever it is, it's adding to the refund. every credit won't add to it won't create a refund, but it's going to take away from the bill. I pray that I am explaining this well enough for somebody who has no clue to at least try to start to grasp the concept of why we're looking at deductions and credit.
Right. So
Um,
somebody write in
but
the chat that they understand. Like, y'all understand, or do we need to explain a little bit more?
yes, please let us know if you're tracking with us. If you're tracking, put tracking in the comments. Again, this is the third week, and I feel like this "Well I Heard" segment is too long. I don't know. It's a work in progress. You know what I love about building something new is so much room for growth. It's so much room to change and to,
Oh yeah.
so
Oh yeah.
every week I do like these little pre-shows with my co-host with my team, and I be telling y'all like I'm not very none of like this is just the flow that's been working, but if it ever stops working, we can change it. Like
Right.
I love the freedom to change, because I mean, who gonna check us?
Right. You can't tell me nothing.
Okay, but back to the All right, so let's move to the T on taxes. So our main topic is um those common forms. A lot of people always ask us, well, what should I upload? What are you looking for? And I don't know if it amazes me. I am, because in my head, I'm like, any tax form that you have, but a lot of people don't know what we're looking for, like what we need to actually file your return. So we're gonna go over a few common forms and what they're used for, why we need it,
Yeah.
what the name of the form is, and a little bit about where you can find it.
All right. And so I feel like for this topic, that I think this is what gives people the most anxiety about taxes, because you do taxes one time of the year, and then for the rest of the year you're not thinking about, like, oh, I need to look for this form, or oh, I donated something to a charity and I need to get a receipt, or I have my own business and somebody did a service for me, so I need to do a 1099. So you don't think about that stuff. And then when it's tax season, it's just like, oh my God, I got to remember everything that I did, or what I need to be looking for in the mail. So, yeah, so.
Yeah, that's true. I can see how that could be overwhelming to try to gather. So one of pretty common form or situation is a mortgage interest statement. So it's a 1098 mortgage interest statement. And this will come from your mortgage lender, broker, mortgage company. And it is a statement of interest. So basically telling us like how much interest you paid on your home. I've had clients that have two because they refinanced or took out a second mortgage or whatever. Um, but having the whole form is important too. She said she got hers yesterday.
Okay.
Having the whole form is important too, because especially if you just bought the house. But either way, it's still helpful, because if you pay property taxes throughout the year, that will be on the statement as well. Well, most of the time it's on the statement if you're doing it through the mortgage company. So that's really helpful, because that can be on the return too. But the thing with the mortgage interest, we will always take it, but it's not always used, because you have to itemize your deductions to take advantage of the mortgage interest being on there. Most cases, most people don't itemize. However, if you have a business, there's a chance that we can kind of um, use that on the home office deduction sometimes. Um, but most likely, if you're not itemizing, it's not really helping much.
Mhm.
Um, because even the personal property taxes is on the Schedule A. You have to itemize. You want to take the next one, Brittany?
That's that the education 1098T.
Mm-hmm.
So you'll receive that one from the school. So if you've paid any tuition to any accredited school, they're going to issue you a 1098T that we can use on your taxes as well, and for the education credit.
Yes. I know a lot of schools have them online now. I know when I was in school, years and years and years ago, they would mail
They sure
they
did.
would like mail it or give it to you. But now a lot of schools won't mail it, and they want you to get it off. What is it, Blackboard or whatever it's
Oh
called?
yeah. Mm-hmm.
Oh wow, I don't even know what it's called.
Oh, go ahead.
I don't
But
even know if they call it Blackboard.
it's somewhere online from your school
Online.
though. They'll provide
Yes.
it for you. Yes, they'll provide it for you.
And another thing about this is normally, well, I'm not gonna say normally, but either the parents will have this or put this on their return, or the child. If the child is filing by themselves, they worked, they got their own money, they filing their own tax return, they can put it on their own tax return and get that credit. But sometimes the parents, especially if there's a Parent Plus loan or parents are paying for the school, they'll put it on their return. So that's kind of a case by case as well.
Mhm.
Another common one, the 1095A, which is the healthcare from the marketplace. So the 1095A is purchasing healthcare. So other adjacent forms are 1095B and a 1095C. Um, a few years ago, we used to need each one. Like no matter which one you got, we used to have to put it in return. Not anymore. We only have to put 1095A now. If you get a 1095B, I know C is from your employer. Like if
Mhm.
you had health care from your employer. I can't remember what B was.
So we can see.
Something similar.
Let's see.
It's something similar, but it's healthcare. We no longer need those two. So if you get those two, it's for informational purposes. So we don't need those, but only if you purchased your own healthcare, we need the 1095A because, like we mentioned before, it's connected to the premium tax credit. So that's why we need it. So the premium tax credit is something that you kind of signed up for when you got health care, and they kind of ration it out throughout the year. So when we get that 1095A, we get to see how much of that credit you used. Man, some people understate their income to get a lower premium. We was talking about this. And then you qualify for the premium tax credit. But then on your tax return, you made way more money and you were overqualified for that credit. And then you got paid back. I've seen people have a refund. We sent it off. It gets rejected because we can't even, they won't accept it if you purchased insurance, has this on there. I think it's the form 8932. They were rejected.
Mhm.
They
Mhm.
were rejected. And so it came back and I was like, hey, you purchased insurance? And they were like, yeah. And so I was like, I need that form. So when I added it, they had to pay a little
Yeah.
bit. They had to pay a little bit. So, but I know a lot of people don't really know what that is. They trying to get the lowest rate on the when they sign up for healthcare. Sonia said it's usually in the cashier's area. Oh, she's talking about the
B.
education. I think that's what she's talking about. The
Oh,
bursar's office. I think that's what she's talking about. Thank you,
okay.
Sonia.
Yeah.
And then real quick, I'll go over the 1099-G. Pretty common. I mean, so pretty common. So this is like government payments. So if you got any type of rebate, we got a rebate. Well, yeah, Alabama got like a little rebate situation. The government will send you a 1099-G to record any type of income that you receive from the government, any state refund, local refund, whatever type of rebate or anything like that. You'll see that on a 1099-G. Couldn't have any comment. But anyway, and we have 1099 NEC or miscellaneous. You can take that one, Brittany.
Okay, so yeah, so 1099 miscellaneous. So that one is used to report any type of miscellaneous payments or miscellaneous income. So say you won at bingo, some prize money. It'll be issued to you in the 1099 miscellaneous. Now the 1099 NEC, so that's used to report income that for independent contractor payments, basically. And so for that one, say you've done work for someone and they paid you, and especially if they paid you more than $600, they're supposed to give you a 1099 NEC. All right, and sometimes it's subject to self-employment tax. All right, so that's one of the biggest differences.
So the 1099 NEC. So it used to be a part of the 1099 miscellaneous form.
Mm-hmm.
It used to be like box 7 or something, box 4. But they moved it to its own form a couple years ago.
They did.
So the 1099 NEC, we see it. We assume you were a independent contractor, and that you had a side hustle of some sort, right? So we see you got a 1099 from, I don't know, let's just say consulting. We're assuming that you have some type of consulting company or business or hustle on the side. And so we're going to ask, like, hey, did you kind of do this for other people? Do you have expenses to go along with this service that you offer? And, most times people do, and that's where the self-employment tax will come in, because we're going to move that income or attach it to a Schedule C, which is profit or loss from a business. There are some instances where you just work the side job and it's not your thing, it's not a business, and you don't have expenses. Then we'll add it to the 1040 as just other income.
Mm-hmm.
Then there's no self-employment tax, but you also can't deduct any expenses either.
All right.
So give and take. Going back to the 1099 miscellaneous, I want to go over some of the things that is on there, or reasons that you might get a 1099 miscellaneous. Like she said, bingo, like prizes and awards, other income payments. Another one that's on there, well, some of the other ones are not as common, like the fishing boat proceeds. Not as common. Cash payments for fish or other aquatic life you purchase from anyone. Not really that common here, I guess. Some of the other ones, medical and healthcare payments.
Okay.
Other income payments that you may have gotten that don't classify as non-employee compensation, which is what NEC stand for. I don't know if we said that. Rents that you received that may not be for like a rental income or something like that. It's literally like for a miscellaneous, like it says, I thought royalties was, yeah, royalties is box two. So, if you publish the book, publish a record or something like that, and you got a couple of royalties. I've seen 1099 miscellaneous forms with just like $3 in royalties, but hey, they send it to you and we gonna put it on there.
Right. Right.
We gonna put it on there, okay? Um, Brittany kind of mentioned the 1098E, the student loan interest form, when we were talking about the student loan interest deduction. Then we have the 1099B, which is a broker. I'm probably not saying the actual name right. What was it, broker and barter exchange?
Yep, that's it.
Proceeds from broker and barter exchange. So that's like your stocks. Then you got 1099 DIV, which is dividend income. So if you cashed out some dividends, um, you got the income. Even if you rolled it over, they still may, if you reinvest it, they still may send you a 1099 DIV to show the activity. We got a schedule K1 you get from your involvement with partnerships, S corps, um, things of that nature. You would get a K1 if you're a partner, or owner, or officer of another entity. They'll send you that to record your part of that company or your part of the income deductions, credits, losses. 1099K is pretty common now.
Yeah.
It's
But
pretty common now.
yes, it is. So that one, the 1099K is from a lot of it's from your third party network transaction. So what's that, like your PayPal,
Square,
Square, yeah.
Stripe,
Basically
the else.
anywhere that you if you have like a business and you use that particular service to obtain um, oh well, for somebody use that particular you use that particular service for someone to pay you basically. And so
Mm-hmm.
so yeah, that's where you'll get the 1099K from.
So 1099K too. Some companies will have like an income threshold before they send you one.
Mm-hmm.
Sometimes it's like $20,000, but sometimes it kind of depends on how many accounts you have with them. I got clients that have multiple accounts with like Stripe or Square, and they get like 3 or 4 1099Ks. Um, and they may not all be like completely filled in. So the 1099K will break down each month, like how much you made for each month, which I think is pretty cool. But that's the income statement that we see kind of often. But another one that you want to think about is your contribution statements, which
Yeah.
I think a lot of people is kind of sending out and getting now.
Mm-hmm. Yes. So like one thing I do want to note with the contribution statements, don't just have somebody just type up something on a computer just saying that you gave this. Try to have a legit form um, stating that this is how much you gave, and try to include the tax year. So for instance, for church, have something that kind of states that you gave this amount from January 1st to December 31st of 2023. And I had an experience where one of my church members had got audited, and that was because when they gave their contribution statement, it did not say when they gave it. They started being real nitpicky, and so I just wanted to point that out as well with the contribution statements.
Yeah, and two, usually the statements will have the organization name and address, phone number, website, something like that. Now I always tell people I'm not an IRS auditor. I'm not an auditor. If you don't have all these things, I'm going to say, like, I can't file it because it don't got this on it on the giving statement. I'm not going to do that.
Right.
But we tell you these things because if you are audited and there's something on there that can't be verified, they will take it off and disallow it or fine you or decrease your refund, whatever. If you can't prove everything that's on this tax return, they can disallow it. They can do whatever, really. They can fine you. They can whatever. So I always tell people, I will put it on here. If you say you gave X amount of dollars, now I may make you sign something to cover my butt, but I don't actually. I'm not sitting there auditing you. I'm just gonna tell you, you make sure that you can cover your butt if if they ask about this.
Mm-hmm. Exactly.
But we also reserve the right to say no, and I'm not filing it because my name is on the return too.
Yeah. Yeah.
Mm-mm-mm.
Yeah.
All right, so those are some of the common forms that you kind of want to be getting together for your tax repair. I hope that this was really helpful. Um, I'm definitely going to take this little list and put it in our little document. I love that. I want to know most of the people here is like our team, and we love y'all for staying. But I do want to see if anybody has any questions regarding this or anything else. I think I wanted to start like getting a pulse on what people want to know. It's hard to kind of tell what people want to know or don't know yet. So if I could think of anything that you have questions about or you've been asked, and some of our team is here, some questions that you have been asked or some things that you have been seeing a lot that you may want us to talk about either here on another show.
Mm-hmm.
And even if you're watching this playback, let us know, like, was any of this confusing? Like,
Right.
were we talking too fast? Were we talking like still over your head? And two, I was thinking about this when we was talking. I said this last week, but I kind of forgot that I want to figure out how to get stuff on the screen, you know, like or have like some type of presentation or something. I see present on here,
Oh, I see that too.
but I think I need to have it like prepared, like like
Right.
extra like a little, what is it called?
Like a PowerPoint presentation type thing.
Yeah, the PowerPoint. Yeah, we're older. We're saying PowerPoint. I don't think they say PowerPoint anymore. I'm gonna ask my son, do he know what a PowerPoint presentation is? Do they still do that?
But yeah, we definitely like look forward to just educating everybody and just creating like a safe space for questions. Like, you know.
Yes. What before we go, I said this to you before we started that I was gonna ask you or talk about. But if I'm gonna ask you, because I feel like I've given my story 100,000 times, but I want to ask you, what made you want to into taxes and being a tax preparer? What made you want to learn? And two, what has made you stay for 4 years?
Okay, so I'll try to keep it short. But my tax story, I'll say a few years ago, I was part of a postgraduate fellowship. And so we got paid in stipends. And so, of course, you just see all this money, like, oh, yeah, I'm getting all this money, I'm getting all this money. And then when tax season came, I had to owe a whole bunch of money. And I didn't understand why. And so the tax preparer, she had told me, she was like, yeah, ma'am, you were supposed to pay estimated taxes. And I was like, nobody told me about that. Like, I've never heard of that. You know, I've always had W-2s and then I got paid with a stipend. I was like, nobody ever told me that I had to pay estimated taxes. So I had like a whole breakdown, even had to take out a loan, y'all. Take out a loan to pay back these taxes. And I said, you know what? Never again. So I started doing research and I started like just researching different tax laws because I'm like, I know this. I can't be the only one who has had a tax situation like this, and so I wanted to do research and about it. I even started finding was it moving expenses, stuff that I could write off. I was like, oh yeah, I'm finding everything for this next tax season. I said, and then I started doing estimated taxes. All right, long story even shorter, COVID happens. Courtney posted, of course, about taxes. Like, she's going to teach about taxes. I said, you know what? I'm gonna use this opportunity to learn about taxes because I want to, I don't want anybody else to go through what I went through. And all of it was because of miseducation. Like, I did not know. I did not know. And I was like, I don't want anybody else to be in this boat. So I took the course, and then Courtney invited me at the end of the course. It's like, hey, you guys took my tax course. Would you like to, work for me to do taxes? And I was like, yeah, why not? And so I've stayed. Like I said, this is my 4th year. And I stayed because each year she trusts us with a little bit more in, like, not just individual taxes, like learning how to do business taxes and even more complicated taxes. And so I enjoy it. I enjoy the challenge and I enjoy learning. So, and it's fun. This is a good team, y'all. Like, we have a really good, solid team. So I love it.
So thank you for sharing that. Y'all, we mentioned the tax course. That was the first one.
Oh, wow.
You were in the first one. Yeah,
Mm-hmm.
y'all were in the first one. You and Tamisha, y'all were in the very first one I did. I didn't do a class this year. I just wanted to like work with what I have and fine tune the team that I have and get y'all ready to like for more or whatever. So we are bringing the tax course back next year. Well, this year. I ain't gonna say the name because it's not copywritten or nothing. It's not trademarked or nothing like that. I ain't gonna say the name on here. But tax classes are coming back in the summer of 2024. So it'll be starting like I think August of 2024. So, and I'm only saying that because this is YouTube and it's forever like evergreen. So somebody could be watching this in July and be like, "Dang, I was just thinking about the tax course." Yeah, look us up.
Yeah.
Look us up. Check the description. Maybe I've updated it by then. I don't know. But again, you can follow me at Tax Coach Courtney. The link is below. You can follow Brittany at Delicate_Diva5. The link is below. And follow our firm, Import Tax. We're trying to grow this page. We are putting out some good content.
Yes.
We just getting started, honestly. Like these next 3 months about to be fire. Like I already know. So thank you guys for tuning in. Catch us next week at 8:00 Eastern time, 7:00 Central time.
Mm-hmm.
Like I said, in the meantime, keep up with us on social media. And you can definitely schedule a free call with any member of our team. It's free 99. And you can get your questions answered and get the process started to filing your taxes this year. Don't wait to the last minute now. Don't do it. I got a handful of returns to do from 2022.
Mm-hmm.
Yeah, 2022 to process this when they open this year because they waited too late. Like,
Yes.
I was like, we can go through the hassle of mailing this return while the IRS is closed, but that is a black hole. So let's just wait until the season restarts and we'll file it then. So I got a few to file from last year. So.
I got one. I'm waiting.
Yeah.
Yeah.
If you can help it, don't wait that late.
Yes.
Let's go ahead and start. Cause it could take a while for you to get all your stuff together. It could. Like I just sent my girl they W-2s they stuff yesterday.
Oh. Need to check the mail.
Yeah. Yeah. But so things are still, and we got some time, but it's go time. Again, thank y'all so much for tuning in, and we
Yes.
look forward to y'all's comments and questions. And until next week, we will see y'all then. Oh, we gotta take a picture. Y'all, wait. Hold on, hold on, hold on. If y'all want to take a quick picture of us to post on Instagram and tell people to come and watch this show, like it's only gonna get better and better. Like it's only gonna get better. Okay.
Right.
Take a picture real quick for y'all's Instagram and stuff, and y'all tag us. Ready? 1, 2, 3. One more. 1, 2, 3. Always gotta do the. Why is it everybody? Okay. Anyway. All right, y'all. We love y'all. Good night.
Have a good night. Thank y'all for tuning in.